CIBC Stock Review 2022. Fully updated, an in-depth examination of the CIBC stock platform from the perspective of a seasoned stock investor. I'll go over its advantages, disadvantages, strengths, and weaknesses, as well as my own experience with it. You'll know whether it's the ideal stockbroker platform for you by the end of this review. You've come to the right place if you're wondering if the CIBC stock platform is the best stock for you. Because this is the most comprehensive review of the CIBC stock platform available on the internet. As an investor, I realize how tough it can be to choose the finest stocks platform, especially when there are so many options available on the internet, all with different pricing ranges and features. I'll walk you through the platform and offer you a verdict to help you decide if CIBC is perfect for you. Even if you haven't used the platform before, this will help you understand how it works. In this review, I'll go through the pros and cons of each CIBC stock, as well as how it stacks up against the competition. To make things simple, I'll give you a number for each feature, as well as an overall platform score at the conclusion. This is one you will not want to miss. So, without further ado, let's get started exploring the CIBC stock platform feature by feature. A look at CIBC overview. Canadian Imperial Bank of Commerce is the country's fifth largest bank, with operations in three areas: retail and corporate banking, wealth management, and capital markets. It has about 11 million personal and business banking customers, mostly in Canada. CIBC is a financial institution that provides wealth management, commercial banking, and investment banking services. It also has a considerable presence in the United States. Because of the strong economy, the company's stock has been performing well recently, although some analysts are concerned about potential hazards. Now, CIBC Stock Review. Should you buy it right now? CIBC is a terrific option if you want to invest in a blue-chip Canadian bank. Over the last 12 months, the stock has increased by 15%, and over the last 2 years, it has increased by 42%. The company's earnings have been increasing at a faster rate, with revenue climbing 6% year-over-year in fiscal 2019, compared to just 1% in fiscal 2018. CIBC also pays a forward dividend yield of 4%, which isn't very high but is comparable to other large Canadian banks such as Bank of Montreal and Royal Bank of Canada. Aside from its continuous dividend payments, CIBC has a low price-to-book value when compared to its peers. CIBC Stock is a Canadian bank that offers a wide range of financial products and services to corporate, commercial, and retail customers. Personal and commercial banking in Canada, wealth management in the United States, and CIBR are the four segments of the company's operations. CIBC Investor and Treasury Services. In the United States, CIBC Bank USA N.A., doing business as CIBC Bank USA, is CIBC's wholly owned subsidiary, U.S. Since 1869, the firm has been listed on the Toronto Stock Exchange under the ticker code CM. NYSE/CMV, TSX. Let's ask ourselves this question. Is CIBC stock a good buy? The stock of CIBC is a smart buy since it provides a nice mix of dividend income and growth prospects. Since 2011, the bank has increased its dividend payout every year, while earnings per share has increased by an average of 6% per year over the last decade. CIBC's high return, in addition to these considerations, makes it a strong pick for investors hoping to profit from rising interest rates without taking on too much risk in their portfolio. Now, how to buy CIBC stock. You've made the decision to invest in stocks and have narrowed your options down to CIBC. That's fantastic. But how can you go about purchasing CIBC stock? Investing in CIBC stock is actually rather simple. The trick is to identify the best broker for your needs, then follow these simple guidelines. Find out more about CIBC stock. Consider your particular risk tolerance, finding out more about CIBC. Like all company stock, to which CIBC stock is no exception, you should do your homework before purchasing CIBC stock. The first step is to learn more about the business. Ask yourself these questions. Is it financially viable? Is there any debt on it? Is the company's track record impressive? All of these are crucial questions to examine before investing in a CIBC stock. Financial reports and other publicly available data on the company's website, as well as third-party websites such as Yahoo Finance and Google Finance, can provide answers. You should also check to see if CIBC has a good reputation in its field, which is already covered in this review. This will help to ensure that they won't go out of business very soon. It's critical to understand your individual risk tolerance. Your risk tolerance is a metric that determines how much danger you're willing to take, and it differs from person to person. If you enjoy roller coasters, you may have a high risk tolerance, but if you're terrified of heights, or even just taking a few steps up onto an escalator, you may have a low risk tolerance. How much money, or, in this example, stock shares, could you lose before panicking and selling out of your investment is a useful approach to think about your personal risk tolerance. The more at ease you are with losing money, the higher your personal risk tolerance level will be. If someone offers me $10 million in cash right now or $10 million plus a 50% chance of winning another $5 million later this week, I'll take the sure thing every time since I don't like taking chances with my money. You should also evaluate the following elements that affect your ability to deal with future losses. Do any members of your family or friends rely on the profits from this investment? Are there any other financial goals, such as retirement savings, that might be harmed if you sold at a loss? Now, how to open an account with a broker. When you purchase CIBC stock, you do so through a stockbroker. So, first and foremost, you'll need to open a brokerage account. Brokerages are businesses that connect investors with stock exchanges to assist them purchase and sell stock, like CIBC Stock. In most cases, your broker's fees are paid in addition to the cost of the trade. These fees can come in a variety of forms, including commissions, account management fees, transfer fees, and so on. Brokers may charge different rates depending on the amount of transactions each week or month, as well as other considerations such as how frequently they trade stocks versus bonds or other investments. Those who trade infrequently could see higher costs overall because they'd pay for every transaction rather than having these costs spread out over multiple trades within a given time period, as someone who does frequent trading would have fewer transactions within that same time frame. Check daily price of CIBC stock on a chart. Compare the daily price of CIBC stock to other stocks on a chart over time. How does its performance compare to that of other companies? Now, choosing the amount of shares you want to buy. Let's speak about the amount of stock you want to buy now that you know what CIBS stock is and how to buy it. One aspect that impacts how many shares of CIBC stock are purchased is the amount of money you have to invest. Another element that determines the amount of shares purchased is how much money you can afford to lose. If you're considering buying a large number of shares just because they're cheap but have no intention of retaining them long term, this may not be the best option for your portfolio. Consider how much money you can afford to lose when investing in stocks. Because there are risks associated with them, such as share price fluctuations due to factors such as the global economic environment or industry competition, among other things, which can affect share prices negatively or positively at any given time, affecting the percentage return achieved over a given period, such as a year. There would be less risk involved if $200K was invested in an index fund tracking all major U.S. companies, such as the Dow Jones Industrial Average, which tracks 30 large American companies every day during trading hours, than if only $20,000 was used instead. Because there would be more diversification within this larger index fund, as opposed to just one company's stock price fluctuating wildly based on macroeconomic conditions affecting only one sector at a time. This means that having multiple stocks in your portfolio rather than just one type allows for greater diversification, which reduces overall volatility and increases your chances of achieving good returns over longer periods of time, such as 5 years or more, depending on market conditions at the time. Another factor to consider when deciding how much capital to put into each share purchase order is how many shares can be afforded to lose during short-term volatility while still having faith in the management team's ability to execute the strategic plan successfully over time without knowing what the future holds. Now, purchase CIBC stock. You'll need a brokerage account to buy CIBC stock. You can make one online in a couple of minutes if you don't already have one. Consider choosing an online discount broker that offers more than just trading. Some even provide access to bank accounts and tools like retirement planning and robo-advisors. Funding CIBC stock should be simple once your account is set up. A company's stock can be listed in a variety of ways, including shares in publicly traded companies, such as CIBC stock, can be purchased right away on the company's website or by calling them directly, if they're publicly traded. Private corporations require an intermediary, such as an investment bank or stockbroker, to enable them to purchase stock and resell it through a brokerage business such as Fidelity or E-Trade, for example. Every sale made through these brokerage firms will almost certainly incur commissions. However, there may be advantages to buying through them because they provide access to research reports on specific stocks and other services that can help you decide whether or not to invest in a company's future potential. So, is CIBC currently a good buy? You can buy CIBS stock. There are a few different methods to go about it, but they all entail buying through one of three primary channels. Cheap brokers like Vanguard or Fidelity. Full-service brokers like Merrill Lynch and Morgan Stanley, internet brokerage firms like E-Trade and Charles Schwab. If you're looking for income or want to diversify your portfolio, CIBC stock might be worth a look. The organization is well run and relatively easy to comprehend. However, it is not the only Canadian bank worth investing in right now. Now a look at CIBC stock pros and cons. The pros. It is a very stable company with a good track record for raising dividends. This means that it would be great for income investors. It is very stable in terms of stock price as it is a large multinational bank of Canada. It is a good investment for people who don't want to take on too much risk. It's one of the largest banks in Canada and has been around for a long time, so it's very stable in terms of stock price. It is a safe investment with stable dividends. You can expect a consistent increase in your dividend yields every year and also know that you will receive them once they meet certain criteria. The stock price has risen about 4% since last year, which is slightly better than the market average of 3%. The dividend is at 4.03%, which is better than most banks in Canada. The cons. It is not as exciting for those looking for big upside potential in the future. CIBC offers a lower dividend than other investments, making it less attractive for investors looking for growth opportunities. CIBC's profits have been pretty stable over the past decade, but they have been declining slightly over the past year, so there might not be a big boost in the stock price from this dividend increase anytime soon. Now, the conclusion. I've covered everything you need to know about buying CIBC stock, from the fundamentals of investing to what makes this company a smart investment and how to actually buy shares. There are compelling reasons to invest in this company in the future, especially if interest rates are expected to rise in the near future. Furthermore, the company provides a big and recurring dividend. Finally, Canadian banks have a track record of outperforming their peers in rising markets, making CIBC stock a promising buy. This company's stock is valuable because of its steady dividend payments. Since 2002, it has increased its annual distribution by an average of 7% per year, which is encouraging for investors looking for steady gains over time, albeit dividends aren't guaranteed. Finally, when markets rise, Canadian banks have historically performed well because they do not take large risks with their capital base. Instead, they focus on conservative lending policies while simultaneously offering traditional financial services such as mortgages and deposits, all of which customers desire more in good times.